Hey everybody, welcome to August 27th's MakerDAO community call. My name is David. I work with community development here at Maker, and I host these calls every week on Tuesday. And usually these calls are all about just what's been going on in the Maker universe for the last week. We go over everything from governance, partnerships and grants, highlights from the community, uh, developer creations, videos, interesting threads, et cetera, and also real life events. So this week, we had quite a few interesting things on all fronts. I'm gonna kind of launch into it today. We have a pretty scant call. Sometimes we have like guests, we have more engagement participation, but today it's only like a few of us in here. So really, we're just gonna do a quick recap and try to keep this call maybe short, maybe like 30 minutes. So in the land of governance, so, in the land of governance, we have a few things that happened this week. Finally, after multiple weeks of struggling to get the vote passed, the vote to lower the stability fee to 18.5% was executed on August 22nd, and so MKR holders managed to summon around 90,000 MKR to beat the standing 78,000 MKR in one of the older proposals that was blocking uh, this lowering of the fee. And so that happened on the 22nd, and so CDP holders can rejoice that their rate is now 18.5%. But with that, if you guys have been paying attention to the peg is still trading at uh, pretty steadily above $1. I think the volume weighted average price over the last 7 days, Vishesh was saying it was around $1 and a penny. So, I think it would be safe to say that one of the topics of discussion in a couple days in the governance and risk call is probably going to be the lowering of the fee even further. But yesterday, not but additionally, yesterday, a new governance poll came out. As usual, governance polls around stability fee adjustments come out every Monday. And so right now we are polling MKR holders to see what their preferences are for further stability fee adjustments. And while I'm here, I'm just really quickly going to check. I just want to see what the current uh, poll is saying. Yeah, it looks like there's 15,000 MKR voting to lower it another 2%. So a lowering of 16.5% seems to be in the winning slot right now. But the governance poll runs for 3 days. So it is actually going to end Thursday at around noon Eastern Standard Time. So in 1 day and 23 hours, pretty much 2 days from now. So if you're an MKR holder and you are uh, interested in voting for what the stability fee should be, go for it because this vote will inform the coming executive vote that will likely launch on Friday. And so, with that, there's a bunch of really interesting threads on our governance forum. The team itself has put out a couple of mandates. Last week we mentioned it, but I want to mention it again in this call that there's a standing description and mandate for the community to consider the role of an interim governance facilitator. And this role is basically, somebody in the community who is compensated to do pretty much the work of what Rich is doing. Schedule calls, surface threads in the forums. Act as a facilitator in governance in MakerDAO. And so there's a lot more details than that. Uh, and so you guys could read the thread online and go explore it and disagree with parts of it if you do, or agree with it. And so we're trying to get the community's consensus on this kind of role right now. And then the other mandate that we put out is from the risk team, uh, and it's about risk teams. So Cyrus put out this mandate, and as many of you know, MakerDAO is kind of two things. It controls for the monetary policy of Dai, and it's also going to be really important for us to be managing the onboarding of various different collaterals that are going to be accepted in our system. And to do that, we have this framework that utilizes these things called risk teams. And at the moment, there's an internal risk team at the foundation, and we have a working group of people in our community that help. But in the future, we expect this decentralized risk function to grow, in that there's going to be multiple different types of risk teams. And so this mandate dives into a bit of the emerging concept around that. And so it outlines that there's going to be like submitting risk teams that are very generalist. That there's going to be specialty risk teams that are specialists, right? And so we're all working together to create an effective risk team function, because they are pretty much going to be the professionals that are going to be assessing all of these different collaterals that the community is going to want included in MakerDAO. And so, with that, there was a large mandate, a lot of documentation into the details of what risk teams are responsible for, how risk teams might work. And we're looking for community feedback on this topic, because it's really important for us to talk it out and figure out how to do it right. So, a few other threads, a little bit less pressing, but nevertheless very interesting. There was a thread by Long for Wisdom about governance in the next few weeks and months. Parallelism question mark. And the idea behind it was, now that we could run concurrent polls, we could do more on-chain governance polling in the community. And so I haven't read too much into the thread, so I might actually. Oh no, and it's not by Long for Wisdom. It's actually from IMEO. So apologies. But yeah, I didn't get to read too deeply into the thread, but there's some discussion going on there. Definitely check it out. And then there was the thread posted by Long for Wisdom, which is, why aren't MKR holders voting? And this was kind of a thought exercise uh, into why MKR holders, don't vote, or like, the ones that don't vote, why don't they vote? And he does a really great job kind of breaking it down, trying to understand the obstacles, trying to understand sort of the free rider problem that exists, and also tries to explore solutions and how we can get more MKR holders to vote. And so, also very interesting thread. Uh, and with that, additionally, there was a thread by Long for Wisdom about his position in the community. So if you guys have been around for the last few months, Long for Wisdom has been an absolute star in governance. He's been doing a lot of the really, really great intellectual work in the community, and framing things, and putting around. Uh, he's been really spearheading a lot of things in the governance community. And with that, at the foundation, we want to keep incentivizing people that are passionate about the project. And so we really, really like Long for Wisdom and his contributions. So community development offered a stipend to help him continue engaging, and also to do some additional work. And so he clarified exactly the details of all of that in the thread. And likewise, the foundation has given stipends to a ton of people in the community for various things. And one of the biggest things we emphasize is their ability to remain independent in their communications and opinions about the foundation, MakerDAO, et cetera, et cetera. So these stipends are really just to help people remain engaged, because one of the biggest things in decentralized communities is, you do work and there's no incentive, and you fall off and people become apathetic. And so it's our pleasure to try to help incentivize really great work when we see it. And so we hope that actually, as in the future, as the foundation dissolves, that actually MakerDAO governance itself would devote devote some amount of funding to similar sort of stipends. And so it was a really great post. We love when people clarify things like that. And actually, even before I was hired at Maker, I also had received stipends just because I was doing work in the community, writing articles. And they always, Rich always made it very clear, keep your opinions. They're your opinions. Don't be afraid to criticize. And that's one of the reasons I really respected the way that community development was handling this kind of stuff. And then the last thread that I'm going to mention from the governance forum is what is this person's name? Mitoti. He wrote a thread about his thoughts on how compensation should work in multi-collateral Dai. And so uh, the idea behind this thread is that in multi-collateral Dai, there's going to be a lot of different people that we're going to have to be compensating, like risk teams, Oracle providers, uh, the governance facilitator potentially, right? And then et cetera, et cetera. Uh, and so there is no clear mechanism to do that right now on a technical level. And until there is one, the foundation is actually the one who's doing all that kind of compensation. Uh, but nevertheless, there needs to be thought an emerging process, and basically there has to be a built out framework for how this compensation will work in MCD when the foundation sort of passes the torch of that responsibility. And so this was a really great thread. I didn't read into it too deeply, didn't get a chance. Actually, just got back from a work trip, which I will talk about a little bit later because it was really, really, really great. But anyway, that's about it for the governance forum stuff. And by the way, if you're in the call, feel free to interrupt me at any point, ask any questions, feel free. So I'm going to launch into some of the partnerships that I saw this week. Consensus Audits announced that their users can now pay for their services in Dai. Likewise, with Mythic's platform, who are also like a security analysis service, they said that their subscriptions will actually be paid exclusively in Dai. So that was pretty cool. And then lastly, the third one that I saw was Travel Nation, which is a blockchain-based travel platform and community based in Korea, now accepts Dai for advertising fees. And so, yeah, those were pretty much the three little partnerships, integrations, people that started using Dai that happened in the last week. Nothing too crazy. I'm gonna go into some stuff that has been happening in the community, and I think this is probably the largest section from this week, uh, especially courtesy of ETH Berlin and the hackathon that happened there, because like man oh man, like so many people built things based that use Dai that uh are into DeFi, that they use DAOs, there was so many really interesting projects, and I'm gonna talk here about a few of them shortly. But before I do, I'm kind of gonna go in order. So there was an interesting poll on Twitter from Vitalik Buterin that asked whether lending Dai to Compound, offering 10 to 11% annual interest, versus the U.S. 10-year Treasury offering 1.5%, like why the discrepancy? And I think 7,700 people participated in the poll, and it was I guess I'll name the distribution. So temporary market inefficiency was 19%, so 1 in 5 people about guessed that. Risk of Dai collapsing was a big reason for the discrepancy. So higher risk, higher yield. 10-year treasuries are very, very low risk. They're like the risk-free rate, right? I think, and Compound is very much trying to be like a risk-free rate, but really it's a money market rate, and really it does carry risk, right? Technical risk on a lot of different levels, not only on Compound smart contracts, but also on the Maker contracts and on Dai itself and the economic sort of game theory of Dai. So the risk of Dai collapsing polled at 53%. So 1 in 2 people, more than 1 in 2 people, voted for that. The third option was risk of compound breaking, which kind of falls into that sort of technical risk. So 18% voted on that, and then other was 10%. So I thought this was really interesting, and it kind of validated my own personal thoughts. So but I definitely think temporary market inefficiency is a big one. So it's probably a mix of all of these, uh, reasonably. It's never one thing, right? Everybody's motivated by different reasons to do different things as markets. That's just how markets work, right? But nevertheless, really interesting poll and a huge turnout, 7,700 people. Uh, so moving forward, uh, we're going to be participating in DevCon at Osaka in Japan. And so we had a T-shirt contest for the Dai T-shirt that we're gonna put out for specifically for Osaka. And Makoto from Kickback actually won it. And his idea, actually, I'll share my screen. I'll show you guys just a little bit of what the design might look like. So the final design is not out, but this is like a traditional Japanese sort of like, I forgot what it is. I think it's actually wood, like on wood, right? I'm not sure, but either way, the idea was that Dai is going to be combined with like the god of wealth. So it's like Dai Kokuten, I think is how you say that. But regardless, it's going to be super integrated, and I love it. I'm excited for interesting t-shirt ideas. But regardless, moving forward, there was another cool thing that happened in the community. So Callisto Network uh, had announced that they were doing free audits on various projects in the space, and among them, uh, they were going to audit the Dai smart contract. And I think the scope of their audit was, I'll tell you exactly right now. The scope was pretty much the Dai token dot sol contract and single collateral Dai. And so they completed their audit and they published it on Reddit and all of the details of it. I think they found some stuff. Uh, I didn't read into it too deeply again because I'm like fresh off of an airplane. Didn't get a chance to dig in, but nevertheless, it's really cool to see this kind of like, you know, activity in the community. So thanks to Close to Network for doing that, and I had sent the link to our engineering team. And then moving forward, what's a week without a little bit of drama? There was some controversy around MakerDAO trying to trademark the term DeFi. And so there was a Reddit thread. Rune had responded with the foundation's sort of official response. Uh, and so that was pretty much settled. Um, don't have too much else to say about it. Let me actually, if you want, I actually can just reiterate Rune's comment. So he wrote, "Hey guys, so this is something the Maker Foundation initiated many months ago as a defensive strategy to ensure the trademark couldn't be captured by bad actors. We saw other projects trying to trademark things like stablecoin, and didn't want that happening here as well." This defensive trademarks are a common strategy, often used by open source organizations such as Linux and Mozilla. And to be honest, we totally forgot about it after the filing, which is why we never communicated anything about it to the community until now that it's come to our attention again. And to clarify, we didn't get the trademark, and if we should get it, the whole point is that we wouldn't use it to enforce for any enforcement action, and no one else would be able to either. So that was the fresh little bit of drama for the week. And so now I'm going to launch into some of the developer creations. Give me just a second. I had actually better notes for this part here. Yeah, so a couple cool things. If you guys know about Gitcoin, Gitcoin actually has like a kudos program. They come out with a NFT every Friday. And we actually met with the Kudos guy on one of our breakfasts while in Berlin. And we had joked with him that he should do Dai Kudos for this Friday's NFT. And lo and behold, he did it. So a big thanks to I think it was I only know him by his Twitter handle Otwaki. Jeez, I totally butchered that. But either way, the Dai Kudos NFT is out, and if you're interested in, giving a cool NFT as kudos to somebody you admire in the developer community, do it. It's super cheap. It's like 20 cents worth of ETH to do it, and there's only 150 of them, so they're a limited run, and they're pretty sweet. And actually, we had a bounty in ETH Berlin around that, and I think seven or 10 people had sent out NFTs. Uh, yeah, so really cool. And so besides that, the developer creation section is really exciting for this week because of the ETH Berlin hackathon that happened. There were a ton of projects that were doing a bunch of really useful things. And so I made a short list of them that actually aren't on the other agenda, but I'm going to copy paste them there now so you guys can see them. Oh, geez, that was not supposed to happen. Yeah, okay. That's right. Okay, cool. So, and by the way, if you're in the call and you want the agenda, I'm gonna repaste it here. So yeah, a couple of really cool projects were Dai insured. So this is like it's a scheme where there's incentivized bots to prevent CDP liquidation with no trust required. And because CDPs kind of require the constant attention of the CDP owner, it's kind of hard. And so this is a service where you can have your CDP automatically monitored and paid off to avoid liquidation to a point. And so, yeah, that was one of the hacks. There was another hack called Yaw, and it's a wallet which takes care of your gas for you. The user just has to keep, a pool of Dai in their wallet, and that Dai is used for transaction fees. It's abstracted away. I think it's just used to buy ETH and like just happens super quickly using Yaw. Another one was Pay Dai, which was Amazon payments with Dai. And there was some back and forth in our community about whether Amazon would like that or not. And Amazon is very, very, very uh, hawk-eyed over how people pay for things and use their platform. So, but nevertheless, it was a really interesting project. The other one was My DAO Dashboard. As many of you know, there's more DAOs every day, and many of them are interesting, and many of us participate in multiple DAOs. And so with that, the My DAO dashboard is exactly what it sounds like. It's kind of one place where you could go and interact with all of the various DAOs that are connected to your public key. And so hopefully, one day you'll even see definitely we will see even crazier multi-DAO dashboards that incorporate things like maker voting. I'm excited for that. Uh, and then next was actually our very own Mariano Conti. He had, I think it was a fork of MakerDAO, but he called it Sellout DAO, and he's been experimenting with dark DAOs and selling votes. And so check that out if you're interested in the black hat from a white hat perspective ones, because if we create the issues now on a small scale, hopefully they'll be solved in a larger scale or not. But nevertheless, sell out DAO. Another really cool developer creation was Cherry Swap. I think they were actually one of the winners at ETH Berlin. And so Cherry Swap Cherry Swap is a interest rate swap and futures prediction market like tool that's like based on Compound and Augur, I think. I might be wrong about its use of Augur, but I'm just gonna read the exact description, so it's a little bit easier for you guys to understand what it is. But on the platform, users can predict interest rate trends and then commit funds into a fixed-term pool deposit into a compound market, taking a position on future interest rates. Long positions gamble on the interest rate increasing, while short positions anticipate a decrease. Then any interest accrued while funds are locked up in Compound is pooled and returned to participants at the end of the lockup, and returned to participants participants who predicted the correct trend in interest rates will earn more than they would have if they had invested directly into the Compound market, subsidized by those who predicted against the correct trend. So, and they also definitely had the prettiest UI. They had like ice cream, and it was all very, very graphically satisfying. But Cherry Swap was a really cool project. And actually, one of the guys on stage was wearing a Maker shirt, which gave me a good feeling in my heart. But moving forward, there was I'm just gonna name four more. These are just the ones. And by the way, there were a ton of great projects, but these are just the ones that are related to kind of Dai, open, decentralized finance, and DAOs, pretty much. Uh, so the next one was Vero, which is the Ethereum credit system. And Vero's idea was basically they created a way for people to assign a credit score, basically to Ethereum wallets. Uh, the next project that I'm going to talk about is Borrowing, and it's basically a lending and borrowing uh, front end, but it also allows the ability to tokenize and trade the debt itself. So it's just working on making the interoperability around refinancing a lot easier, and it wants to actually tokenize the debt of any of your debt on any platform. The next was LS Dai. LS Dai, I think they were also a winner. But what it does, it creates a euro dollar like construct that's a future on the compound Dai lending rate over the duration of the contract. And so they use market protocol. So by leveraging market protocol, LSDAI takes on the approach of decoupling the risk of the two sides. It enables three different types of users to gain the kind of exposure to the interest rate fluctuation that fits their profile while aligning incentives. Uh, yeah, read the dev post. It's I can't really explain it in a few sentences because I have not done enough reading into their dev post page. And so the last project I'm going to mention is Tornado Lend. And Tornado Lend is basically a smart contracts that should be used for things like DAOs or bridges, mixers that keep funds locked in for prolonged periods of time. And the Tornado Lend allows the contract creators to make those funds work by lending them on secondary lending platforms in DeFi like Compound. And yeah, with that, that's all of the developer creations that I chose to mention or feature. There were a ton more. So if you guys have any spare time, definitely look into the submissions for the ETH Berlin Hackathon. All right, so moving on, we're almost through. I'm gonna cover just some articles. I guess I only featured one this week, which was that Huobi is expanding their DeFi presence with integrating MakerDAO and Compound into their wallet. Uh, and could have sworn, nah, I had more articles. I'll feature them next week. I think I came across a few really great articles this week, but I did not remember to put them in this morning. So a handful of great Reddit threads. Similar to Long for Wisdom's post in our governance forum about why aren't maker holders voting. He also posted a similar thread in Reddit called MakerDAO looking for governance. And again, it kind of outlines what the obstacles are and then how you could actually contribute to governance even as a small MKR holder. So check it out. Really interesting discussions. The next Reddit thread was: is there any plan to create a Bitcoin peg token like Dai, but for BTC? Wait, is there any plan to create a BTC peg token like Dai, but for the BTC on the Ethereum network? Uh, I think the title is a little bit crazy, but the comments were really great. Yeah, I'm gonna have to come back about that one. And then the third interesting thread that I saw was a thread saying no MCD. And this was kind of like just a funny thought experiment. Like, the guy posting it was, I don't know if he was serious, but there's a lot of reasons why we really do want MCD, and why single collateral Dai, as good as it is now, uh, is not a suitable permanent solution for the real vision of what it could be. So single collateral Dai kind of it lacks in several areas that are way way more developed and improved in multi-collateral Dai. Like, for example, the fact that monetary policy and risk premium of the underlying asset is mixed in together in single collateral Dai. Like, we don't have a Dai savings rate, but in multi-collateral Dai, you could actually do a bit better to split those two completely different uh, pulling forces. Like, you have the monetary policy, which is controlled by the DSR in MCD, which is a lot more useful on, like, when you have a ton of different CDP types with a ton of different stability fees. And then you have the stability fees really just reflecting the real risk premium of the underlying asset and CDP type. So yeah, it was a good kind of thought experiment, which is why I put that thread here. And then a couple really cool videos came out this week. I think it was a meetup that Nicholas Konkel was a part of that was recorded, and he spoke a bit about demand generation for Dai and synthetic assets. I haven't gotten a chance to listen to it, but I probably will with my lunch. And then
David.
oh, what's up, Nick? I didn't see you there.
I,
Oh,
I, I didn't think so.
oh man, yeah. Hey. So actually, since you're here, do you want to like say a couple words about that? So what was the talk like really about?
So it was about kind of demystifying synthetic assets, which when you say it, kind of people's eyes kind of glaze over. And so it was more trying to tell people, it's not this big exotic thing. Like synthetic assets are just stable coins, right? So just like Dai is a stable coin pegged to the dollar, you can have stable coins that are stable to some reference, but the reference is volatile, right? So you can have a synthetic asset for Bitcoin. You can have a synthetic ETH. You can have a synthetic, Amazon stock, a synthetic U.S. Treasury bond. You can have a synthetic barrel of oil. And now, basically, anyone in the world can have universal access to get price exposure to anything, right? So there's some really cool like financial instruments that you can build using these as primitives.
Yeah, right on. Do you see what do you see maybe as like the biggest obstacle to actually scaling the synthetics market?
Well, so the thing is that right, you can kind of hand wavy say, oh, well, you can do everything and everything is great, but you need to start it off in the areas where there's actually demand, right? If we have a synthetic ETH, is that really that much in demand? You can borrow ETH right now at basically 0% interest, right? There's some very small amount of interest on any of the lending protocols. So it doesn't seem like there's a lot of demand for that. But is there demand for other things? I'm sure there is. So one of the things that I was talking about is the way that these synthetic assets are made is that you lock up Dai and into a CDP, and then you basically are borrowing this synthetic asset. And so this is really like a mechanism for shorting, right? So if you block up 100 Dai and you borrow a Tesla stock and you sell that Tesla stock, right, and you get more Dai, right, from selling it, and then you lock up that Dai, right, now you can do leverage shorting. So if borrowing Dai is a mechanism for going long, then borrowing synthetic assets is a mechanism for going short. And so the connection I made is that Dai demand is actually going to be helped by demand for shorting, because in order to short, you need to buy Dai and then lock up that Dai, right? So
That's a really great
in
point.
terms of lowering stability fees, right, for borrowers and lowering kind of lending fees as well, right? This is having more demand for Dai is really going to help us in that respect, right? Like the equilibrium point for a dollar Dai cannot be like 20% interest or 18.5%, something like that.
So you're saying that as like there does become a market for some synthetic asset, like let's say maybe the first one might be a treasury or something, that is gonna even out the sort of one-sided
Exactly.
reality
start to
Dai
have
creation.
equilibrium points of Dai
Yeah,
demand and Dai creation that
yeah,
is not at 18.5% interest, right? You can
right,
start squishing that down. And so it's actually very, right, DSR, the Dai savings rate is going to help with that as well, but it's very complementary, right, in that they're going to stack.
yeah. That's exciting to hear, man. Yeah, I didn't think about that, like framed that way before. That's fascinating. Sweet, man. Yeah, so the talk is there, linked in the linked in the agenda if you guys want to check it out in more detail. I think it's like 25 minutes, half an hour long. Uh yeah, cool. And then the other video that I saw was actually Gregory DePrisco and Michael Oved and Mark Fernandez from Fluidity. And they pretty much walk through the tokenized asset portfolio. Uh, uh, I don't want to call it a thing. The tokenized asset portfolio with Crypto Bobby. So Fluidity, Factora, they came out with this entire sort of spec idea of how to have on-chain tokenization of assets, and I think Fluidity is mainly working with real estate. And so, yeah, check it out. They go into it a little bit more deeply. Greg had presented a little bit about the idea behind the tokenized asset portfolio in what was it, in New York Blockchain Week just a couple months ago. So if you are interested in that, hearing more details about that, definitely check out the video. Right on. And that's pretty much it for all the stuff in the community, governance, integrations, everything I had covered. The very last section I'm going to cover is real life events. Uh, and so we actually just concluded Berlin Blockchain Week. I think there might be a couple of other events happening today, but I actually just got back yesterday from Berlin, and it was a really, really, really fantastic week. Uh, a lot of people in the community were there. A ton of hackers were there. A ton of great projects came out. And so in the agenda, I linked a couple of Reddit threads that you know mention and talk about some of the hackathon projects. And we also were doing a scavenger hunt thing on Bounties Network, uh, in partnership with like Aave. Geez, my brain is spongy. I can't remember who else was in it. It was Aave. It was, can't remember if it was DexPay. It was us. So on our side, I don't know how much they gave out, but I know that on our side we gave out nearly 200 Dai to just various people. We had a couple of cool bounties. One of them was called Proof of Mate, where you had to actually find Mariano Conti and take a photo with him and his Argentinian mate, which he's very well known for. Uh, there was another one that used send some kudos. Uh, there was another one that was talk to me about our grantees, uh, and it was fun. It was a very wholesome week. It was very very good vibes. And so enough about that. Here's some of the stuff that's actually going to be happening in the coming week. On the 29th and 2 days in Copenhagen, Gustav is going to be participating at the ETH slash Web3 Community Town Hall number 2. That's in Copenhagen. And then also on the 29th, we have in Brazil, Nadia from our business development team is going to be participating in the Blockmaster Forum. I'm trying to go in order. On the 3rd of September in Frankfurt, Gustav and Bartek from our Oasis team is going to be participating in Money on the Blockchain, talking about the Euro, Libra, and custody. Let's see. Also on the 3rd of September in Seoul in South Korea, we have Do from Business Development participating in an Origin Protocol times crypto sale meetup. Next, on the 5th of September in Copenhagen, we have Gustav participating in Tech Festival, which is a pretty well known recurring festival out in Copenhagen. And then also on the 5th in Seoul in South Korea, we have Nathan, our community manager for Korea. So for South Korea, he's going to be participating in the Digital Asset Technology Trend and New Business Meetup. And so yeah, that's about it. If you're interested in any of those events, inside of the agenda that I post with this call, which is also on Reddit, you can just click on the agenda, and all of these events are hyperlinked to their respective event pages. So check it out if you're in any of those cities. And yeah, with that, I think we're pretty much done. We're pretty much done. I'm happy to open it up to you guys for questions, but I know that this week we only had like 4 or 5 people in here, so yeah, I'm happy to end the call if you guys are. All right, sweet. Thank you for coming. I will see you guys next Tuesday. Take care, Ed.
Later.